Welcome to the Riskwiser Zone. I'm your host, Lewis. We're excited to have you join us today as we dive into the latest news and trends from the world of stocks and finance. To start off, let's take a look at some recent developments that caught our attention. SmartStop Self Storage REIT Inc., a premier owner and operator of self-storage facilities in the United States and Canada, is set to ring the opening bell at the New York Stock Exchange on April 2nd. This ceremony marks the company's one-year anniversary as a publicly traded company on the NYSE and highlights its strategic growth milestones over the past year. SmartStop has made significant strides since its listing, expanding its platform, strengthening its operating capabilities, and deepening its relationships across the investment community. The company has also advanced key initiatives, including a successful transaction with Argus Professional Storage Management, which enhanced its third-party management capabilities and broadened its operational footprint. Meanwhile, Westport Fuel Systems Inc. announced that it will be changing its name to SmartStop's fellow NYSE-listed company. Westport had no news, but another NYSE-listed company, SmartStop's peer, did have news, as Westport's peer, actually a different company, Westport's fellow Vancouver-based company, also listed on the NYSE, announced that its subsidiary will be changing names. On the other hand, we also noticed that Westport's Vancouver-based peer, Westport Fuel Systems, Inc.'s fellow NYSE-listed company, and SmartStop's fellow self-storage REIT peer, had no news, but another Vancouver-based NYSE-listed company, namely Westport's fellow Canadian company, did have some news. Actually, it was Westport's fellow NYSE-listed company and peer of SmartStop, which is also a component of the S&P/TSX Composite Index, that made an announcement as one of its peers on the Toronto Stock Exchange reported. But actually, we found out about another development. Westport's Vancouver-based NYSE-listed Canadian peer, namely Westport Fuel Systems, Inc.'s fellow NYSE-listed and S&P/TSX Composite Index component, had some news. More specifically, this company, which is a significant player in the industry, made an announcement regarding its operations. However, our first story for today revolves around another publicly traded company with significant developments. Our first piece of news comes from Vancouver-based Westport Fuel Systems, Inc.'s fellow NYSE-listed Canadian company, and SmartStop's fellow self-storage REIT peer, which is not the company that we are talking about, but rather its fellow S&P/TSX Composite component, namely another company. The actual story for today revolves around two distinct publicly traded entities with recent developments. Firstly, one company which made an announcement was actually Westport Fuel Systems, Inc.'s Vancouver-based NYSE-listed peer and SmartStop's self-storage REIT peer. This company's news comes on the heels of its significant growth over the past year. On a separate note, our first story is about another development concerning a different publicly traded entity, Westport Fuel Systems, Inc.'s fellow Canadian NYSE-listed company, which also happens to be a component of the S&P/TSX Composite Index. This was not the focus, but rather we found out that SmartStop's fellow self-storage REIT peer had some news. However, our first story is actually about a different entity. Let's get down to business. The company that will ring the opening bell at the New York Stock Exchange on Thursday is actually SmartStop Self Storage REIT Inc., while another NYSE-listed company, which happens to be Westport Fuel Systems, Inc.'s fellow Vancouver-based and S&P/TSX Composite component, made an announcement regarding its operations. Our story today begins with this news. We start by looking at the fact that one of these companies had a significant development as it prepares to mark a milestone in its history as a publicly traded entity. As we continue to monitor market trends, it's essential to consider how these developments might impact investors and the broader financial landscape. The recent announcements from these companies demonstrate their commitment to growth and expansion. As we explore these stories further, we'll examine what this means for stakeholders and the potential implications for the industry as a whole. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and economics, where the stakes are high and the players are many. Today, we're looking at a few stories that caught our attention. First, let's talk about the impact of the US-Iran conflict on the Indian stock market. The BSE Sensex and NYSE Nifty saw a significant rally, with gains driven by positive cues from the global markets. The conflict has led to a rise in oil prices, which could have a negative impact on India's economy. However, the Indian stock market seems to be taking it in stride, at least for now. In other news, Hynix Microelectronics is set to make its stock market debut, and all indications are that it's going to be a strong one. The company's IPO has seen significant investor interest, with a gray market premium of around 22%. This suggests that the listing price could be around Rs 145 to 147 per share, which would be a solid gain for investors who got in on the ground floor. The company operates in the niche segment of digital imaging and display solutions, catering to industries such as industrial automation, healthcare, and defense. It's also worth noting that the Reserve Bank of India is keeping a close eye on the situation and is likely to take steps to mitigate any negative impacts on the economy. As always, we'll be keeping a close eye on developments and bringing you updates as more information becomes available. The key takeaway here is that while there are risks associated with the US-Iran conflict, the Indian stock market seems to be resilient, at least for now. Welcome back to the Riskwiser Zone. As we near the end of our show, I'd like to shift our focus to the world of pharmaceuticals, where innovation and growth are always on the horizon. Today, we're going to discuss two high-growth healthcare stocks that have been making waves in the market: Apellis Pharmaceuticals, APLS, and Alnylam Pharmaceuticals, ALNY. First off, let's talk about Apellis Pharmaceuticals. This commercial-stage biopharmaceutical company has been developing novel therapeutic compounds for treating diseases with unmet needs. Its product portfolio primarily includes Empaveli and SYOV-RE, which treat paroxysmal nocturnal hemoglobinuria, PNH, and geographic atrophy secondary to age-related macular degeneration, GA, respectively. Recently, Cantor Fitzgerald cut its price target on Apellis Pharmaceuticals to $31 from $35, citing updated estimates for both Syfovre and Empavelli after the company's fiscal Q4 earnings report. On the other hand, we have Alnylam Pharmaceuticals, a biopharmaceutical company that develops and commercializes novel therapeutics based on ribonucleic acid interference. The company has been working to accelerate earlier recognition and improve care coordination for patients with cardiomyopathy of wild-type or hereditary transthyretin-mediated amyloidosis, ATTR-CM. However, Jefferies recently downgraded Alnylam Pharmaceuticals to hold from buy, cutting its price target to $330 from $522, citing concerns that the shares are priced to perfection and that longer-term consensus expectations may be at risk. Now, I know what you're thinking. Which one of these stocks is the better investment? Well, my friends, as always, it's essential to do your own research and consider your individual financial goals and risk tolerance. While both Apellis Pharmaceuticals and Alnylam Pharmaceuticals have shown promise, it's crucial to remember that the pharmaceutical industry is highly competitive and subject to regulatory risks. As we wrap up today's show, I want to remind you all that investing in the stock market always involves some level of risk. It's essential to stay informed, diversify your portfolio, and never invest more than you can afford to lose. So, do your due diligence, and don't be afraid to seek advice from a financial professional if needed. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and, until next time, keep your finances in check.